Welcome to the Market Week in Review for the week ending August 20th, 2021. My name is Julie Zhang, and I'm joined today by our Senior Quantitative Research Analyst, Abe Robinson. Hi, Abe.
Hello. Hi, Julie.
Great to see you. All right, so on today's call, we're going to cover three topics. The first is the Fed taper fears. Second is on some U.S. consumer data that we've seen this week. And then the third is China's market reaction to some of the new regulations that we're seeing. So let's start off with Fed taper fears. Try saying that 3 times fast. And let's talk about that and how the bond markets are reacting, Abe.
Sure. So on Wednesday, the Fed minutes came out, and they were for July, and they showed a willingness to start tapering asset purchases before the end of the year. The U.S. Treasury hasn't moved too much, so interest rate reaction was pretty muted. This is most likely because the markets have already shown that they know about this and it's priced in, and that there will be tapering, but they're just trying to figure out what month it is. So our view is that it's likely that the Fed will announce the removal of maximum accommodation around November or December, one of those meetings. The S&P 500 declined modestly this week, also as a result. And also there were COVID fears. So COVID fears are a bit pervasive. The new cases are averaging near where they were at the end of the year last year. Good news is that deaths may have picked up, but they aren't as bad as they were during the same period due to the effectiveness of the vaccine.
Oh, great. Sounds like the Fed taper fears are relatively unfounded and priced in. That's always good to hear. So you talked a little bit about the S&P, and let's continue on the trend on the U.S. markets in general. We got some new U.S. consumer data this week. Can you give us a scoop on that?
Sure. Last Friday, the Michigan Consumer Confidence Survey fell sharply. It's been out of whack for a while, though. So if you take a sanity check of looking at similar surveys, they only dip modestly. So it is a cautious read. We shouldn't read too much into it on just the Michigan survey alone. Retail sales slowed about a percentage. This was expected by consensus. Generally, the consumer is still in a good place due to stimulus, healthy recovery, and building up savings during the pandemic.
Sounds like we still have reasons for optimism. And on China, we're seeing a little bit more regulatory crackdown occurring in China. We talked about this in some of the previous Market Week reviews. Can you talk a bit more about what's happening now in terms of that crackdown and how the Chinese economic outlook is looking?
Yeah, so the Chinese economy is looking robust over 12 months rather than so further out. However, there are some risks that center around COVID again, and some of the credit impulse, as well as these regulatory changes you talked about, and just general things having to do with the Chinese consumer. So as far as COVID goes, the data we're looking at shows that the cases in China have turned down recently. Still, the risks are out there, but given China's zero tolerance approach to COVID, they will crack down on it quite heavily if it starts to become more of a problem. So as far as credit impulse, we're likely to see more easing from the Chinese central bank. This is likely to be another cut in the reserve requirement ratio. Interest rate cuts don't really seem to be required at this stage, but we shouldn't count them out. There's still some support from fiscal policy coming. For example, there's the backlog of local government bond issuance. And then there's this changes in regulatory, and they're continuing. They've announced some of these changes to the big internet giants, and their government seems to be focusing on inequality, and so that might drive further regulation. The Chinese consumer, I think retail sales were a little bit disappointing as well. But at this stage, we still think the Chinese economy will deliver robust growth, especially over a 12-month period. But we're watching these risks really closely.
Well, thank you so much, Abe, and for sharing your insights. Short and sweet. Hope you enjoyed it for this week. Thank you all for joining us, and we'll see you soon.
Hi, I'm Eric Risteman, Chief Investment Strategist for Russell Investments. If you like what you saw in this video and want to see more like it, please subscribe to our YouTube channel.